to CNBC TV18. We continue our coverage here from Davos 2022. I'm Shereen, Bhan, and we're now joined by the team from McKinsey, Rajat Anand, Yuito. Many thanks for joining us here on a very cold day in
It's
Davos.
a chilly day.
It is a chilly day. But, you know, speaking about the mood and the temperature, it's chilly today, but let me get a broad outlook on India from you, Rajat, because if you walk down the promenade, I mean, there's
India
a lot of
all
India.
over. There's
a lot
India
of
in the air.
But has it occupied mind space and mind share as well?
Yeah, firstly, thank you. Thank you for inviting us. And I'm really delighted that India is very much in the air in Davos this year. And I would say that, look, the 3 or 4 themes that are very prevalent in Davos, growth and resilience, very much there at the country level and at the corporate level. Sustainability and tech and digital disruptions as 2 perennial themes have always been there in Davos, and they continue this year. Let me say about growth and resilience from the India context, and then I'll hand over to Anand and Yuito. From a growth perspective, I would say, Shereen, 2 things. Firstly, India continues to be a 2-track economy. Yeah. We have high growth sectors such as manufacturing, where I think we're finally getting into the Goldilocks zone. I think we will have an 8 to 10% real GDP growth in manufacturing in the years to come, with globally disrupting supply chains. $3 to $4 trillion of trade flows are moving around, and India will raise its hand. Also, some of the traditional sectors where India has been a factory for the world are always there, chemicals and auto components and so on and so forth. But I would say that some of the sunrise sectors around renewables, solar panels, electronics, EVs, I think these are the ones that in the next 10 years we see a significant growth path.
What's the number that you're working with?
We are working with around 1.25 trillion in manufacturing GDP by 2030. And equally, I would say the global IT services and tech services phenomenon in India continues to scale. And there we are looking at an even higher number of about 1.5 trillion. In real GDP by 2030. So that's a piece on growth, and I'll quickly say something about resilience. Resilience, I think this is very much this time the theme in Davos, both for countries and corporates. And resilience of every kind, not just the supply chain and inflation shocks recently, but we've gone through the health shocks in the last 2 or 3 years. Climate shocks, weather shocks, geopolitical shocks, cyber shocks, what have you. And what we are seeing is that the resilient economies are the one, and India has to really up the game here in terms of getting its systems upgraded, etc. To such that the 8% growth path is something that we absolutely get to.
Anand, just want to take the 2-track economy thesis forward and focus on new tech and tech and IT services and how that will continue to be one of the key growth drivers. What do you forecast? At this point in time, we've seen digital adoption across the board, whether it is domestic or global, and that's really fueling growth. There are concerns on whether we are going to now start to see a little bit of a pause or a slowdown. What's your expectation?
I think the expectation is, what we've seen in India is there are fundamental levers that are actually holding very true. So one aspect of our research suggests technology hotspots in India. And in fact, as we were walking around here in Davos, cities such as Bangalore, cities such as Mumbai, so seeing state of Maharashtra represented here, state of Karnataka represented here,
Telangana,
Tamil Nadu, it's fascinating because almost 20% of the technology hotspots in India, in Asia, are in India, in those cities. And the fact is, it's because 100 unicorns now are from India, and you're seeing that there, with a market capitalization of more than 300 billion, innovation is happening. You're also seeing the fact that almost 50% of the patent filings in technology are coming from Asia, a vast majority of them coming from India. And we're seeing the fact that the adoption of technology in India, it's still accelerating. 700 million internet users in India, 450 million subscribers for smartphones and users of smartphones. That's not slowing down, and that's actually accelerating quite a bit. With those trends, let's then look at people, right? The other aspect is India is still the 2nd largest exporter of STEM talent anywhere in the world. And that's not slowing down either. If we can try to have that level of momentum, it means this growth in new and emerging technology is still going to be coming from India, and it's still going to be scaling. And the last part of it is, to your point, the IT services and the digital services hub that India serves for the world. Well, we expect about 300 billion in value that India can capture by 2030 just from IT services and digital services. But if you expand it beyond that and you look at IoT and Industry 4.0, that's another estimated $275 billion of value that we believe, again, can be captured by 2030 in India.
Okay, that's good. Yuito, let me ask you about the other big theme that is in focus here in Davos, and of course is also going to be a big opportunity for India, the transition to a greener, cleaner future, the move towards ESG, and the kind of flows that we expect on account of that. What's the outlook on that front?
Thank you, Shereen. There's a lot of debates around this topic as well. And I would actually say that India is actually one of the most exposed countries when it comes to climate risks. But on the flip side, there's a lot of opportunities that India has to capture as well. Let me give a few perspectives. Number one, in terms of the risk side, 1 out of 4 global citizens who's going to be exposed to climate risk, this is heat and all the climate risk that we would see, is actually going to be in the 1 out of 4 is going to be in India. So there's a huge kind of perspective when it comes to exposure that we see. Number two, out of 1.7 trillion US dollars, that is going to be the infrastructure that's damaged globally from flooding and some of the climate risks. 1.2 trillion out of 1.7, 1.2 is in Asia. That's 75%. And out of that Asia portion, India is one big portion of it. So there is this risk side, and I think
it's a present danger. It's not a future danger. Yeah.
As we see today, in these days as well. But on the flip side, when I talk about the opportunities, India actually has one of the top quartile when it comes to the materials that is required for a sustainability transition. This is things like zinc. This is things like rare earth minerals, chemicals that the India industry has. It is in the top quartile of serving for sustainability transition. So we see this as one big opportunity. And then secondly and finally, I also see that out of the emissions that India has, 95% of the emissions could be actually addressed by 7 levers only. And out of actually the 7, you actually see that 4 are already economically viable.
But Rajat, let me come back to you. In conversations with CEOs that you're having here in Davos and of course outside of Davos as well, let's address the FDI question. There have been several sectors that are now focus sectors, courtesy the PLI schemes. Now there's a semiconductor policy. Where do you believe a bulk of the FDI is likely to come in?
Yeah. And let me build on the point on sustainability and connect it back to the FDI point, right? As Yuito pointed out, we would need around 600 billion in capital investments in the next 2 or 3 decades to get to India, this is the entire country, to get to net zero by about 2050. And of course, the corporates will chart their own path. But if you look at sustainability today, and he talked about solar panels as one of the 7 big levers, mostly it is imported. 90% of that is imported, and using the PLI and the Atmanirbhar schemes and so on, if we are able to indigenize a lot of that, that's where the capital should go, because we are able to then create sustainable and viable economic models, yet displace some of the imports, and yet meet the sustainability targets. So I would look for some of those virtuous cycles, mini virtuous cycles that we can create in the economy. Going back to
I want you to just pause for a second, because you're talking about, for instance, as far as solar panels are concerned, the need to indigenize and localize and make more in India. The government has also, through a raft of customs duties over the last few years, tried to ensure that that's the path to get people to manufacture and make in India. More recently, over the weekend, we've seen more changes being announced,
yes.
Import, export controls, and so on and so forth. While that addresses a near-term problem, does it pose a medium to long-term challenge as far as industry is concerned?
It does, Shereen. I think in the medium term, it's a response towards the shock we are seeing in inflation and particularly the supply chain breakages that have happened globally. So I think we should look at it potentially as a short-term measure. There were a couple of reduction of duties, particularly on the import side, and then some levying of duties on the export side, and the fiscal math has to also balance out. So I would look at it as potentially a short-term measure. There are other measures of curbing exports if we are facing supply chain disruptions. But I think in the medium term, it is very clear that we have to go for a globally competitive manufacturing value chains where we specialize in. I think there are 11 or 12 value chains that we have researched on, where we think about $500 billion worth of GDP can come from the overall 1.25 trillion number I said.
What would those be?
I think they would be interestingly in high tech and electronics. It would be in apparel, footwear, chemicals, auto components, EVs, pharmaceuticals. We are already a factory for the world, and I think we should do more. Agriculture, ag processing is a big deal, and if we can do it sustainably, it just again creates a mini virtuous cycle I was talking about. So those are the kinds of things. And then totally aside, a bunch of FDI has been coming and will come into the financial services, into the tech services. I mean, those are all, mostly proven business models, asset-light models where investors have been able to find great returns, and I think that there we are on a virtuous cycle.
Well, Rajat, Anand and Yuito, many thanks for joining us here in Davos to take us through the two-track economy that you're focusing on.